Well, somebody forgot to give Santa Claus directions because it doesn't look like he's going to make it for Christmas. This would have been the time to really go. You're looking at the SPY, the S&P 500. It wants to pull back again. And before we talk about that, it's important to have context, right? I mean, look at this. We're not talking about anything catastrophic, but we've been trading inside this channel identified by these purple-gray lines here, back and forth since September, way back here before I charted it. And now we're back inside the two high volume bars from October 10 and November 20. So inside that bar, you can go back and retest the lows here. And you got a high volume bar here. So you'd probably now kind of look at this and see if it retests that on lighter volume. It could bounce and go back up. But we're coming down here on some volume. And you look at the Qs and the Nasdaq, and it's even worse, right? Because if you go back to the SPYs, we went up to the highs and attempted to break out a couple of times. But we failed on volume, meaning if you look at this volume over here, we did not have more volume to break through. So what happens? Turn around and go the other way. And that's what's happening. Maybe this line here at the top of this channel, or this high volume bar here, maybe that gets tested probably at least, if not the bottom of the channel, the main channel itself down here. QQQs wasn't quite as fortunate. It couldn't get up there to the highs. It kind of got sort of up there and then turned around and failed. And you can see they were coming off an increasing volume. Same story, wants to come back down and test the bottom of the channel. But I do the same thing here. I'd be looking for the top of that channel. Or that bar. I always look at the highs and the lows of the high volume bars. We've talked about that on the SPYs in terms of the 10th, same thing here of October. Yeah, it was the 10th of October. And inside this bar here from November 20th. But so as it comes down, watch and see how it reacts to this bar. If it comes down in lighter volume, you could see the Qs turn around and bounce and head back higher. Same thing with the SPYs. So that's what's going on right now in the markets. I won't take your time going through stocks, a couple. But if you look at some stocks, they're not getting hit on volume, but they'll still go down. If I can click on any, let's see. Apple, for example, it's going down, not on volume, so it's not convincing, but you wouldn't be buying it here, right? You'd just be waiting out, cash as a position. Google, pulling back, right? Looking at this high volume bar here for sort of a rejection of that. It's coming back on lighter volume. So there are stocks out there. JP Morgan, JP Morgan's still hanging out above the breakout. So, and it's coming back on lighter volume. Nothing wrong with it. 400 and I can't remember, 400 plus dollar price target. I do remember that, but I can't remember what it is. Point is cash is a position. Looks like we want lower price. It's not the end of the world, not catastrophic, but we will bounce and we're headed much higher. Still believe that this is just the market's just heavy. It's fatigued. There's no explanation for it. This is kind of what markets do. And as long as you're inside this channel, up, back and forth, up and down can happen, right? So the real test is what does it do when it hits the bottom of the channel? That's when you see a real move. Or what happens at the top of a channel? That's when you see a real move. Anytime it's in the middle of a channel, as you know who are traders, it's just consolidation, just chop back and forth. So you can get chopped up a lot in this channel. So be careful, adhere to your stops, protect your capital, and wait to trade another day. Hope that helps. Have a great evening.